Hello everyone. Welcome back to the QQQ vs QLD Challenge channel. It's the evening of November 1st, 2024, and that means it's time for our monthly update. We're going to dive into how our investments in QQQ and QLD have performed and take a closer look at what's been happening in the markets lately. First, let's talk about a change to our approach. Starting this month, we're adjusting our contribution amount. Instead of investing $500 into QQQ and QLD each month, we're now shifting to $100 in QQQ and $100 in QLD monthly. Why the change? I want to allocate more of my investment dollars toward TQQQ and SOXL right now, as I see unique opportunities in these areas. This gives us a bit more flexibility to explore new strategies within our overall investment plan. So, where do we stand with QQQ? Just recently, QQQ reached nearly an all-time high, hitting $501 earlier this week. It's currently sitting around $487. Despite some typical market fluctuations, QQQ has maintained strength above the green 200-day simple moving average (SMA), which we've been tracking closely. This is an important level of support, and it's one we've seen QQQ respect over the past several months. Since March 13, 2023, when we saw a golden cross where the 50-day SMA, purple line, crossed above the 200-day SMA, green line, QQQ has been in a general uptrend. This golden cross is a technical indicator often associated with potential long-term upward momentum. Throughout this period, QQQ has tested this 200-day SMA support level multiple times, specifically in October 2023, April 2024, August 2024, and most recently in September 2024. Each time, QQQ dipped to or near this level but rebounded back above it. This consistent action has reinforced the overall upward trend, suggesting that we could continue to see gains in QQQ as we head toward the end of the year. Based on this strong performance and resilience at key levels, I expect QQQ to maintain its positive momentum in November and December 2024, even after the election and any associated market fluctuations. Now, let's analyze some technical patterns. When looking at QQQ's chart on Finviz, a prominent double top pattern may be forming. For those less familiar with this pattern, it's generally considered a bearish reversal signal that can indicate an upcoming shift from an uptrend to a downtrend. Here's how it works. A double top forms when an asset reaches a high point, dips slightly, rebounds to nearly the same high point again, and then declines. The two peaks represent a level of resistance that buyers have not been able to surpass twice, which may suggest weakening buying pressure. In our case with QQQ, if this double top pattern is confirmed, we could potentially see QQQ price decline. Typically, traders will watch for a break below the neckline, the lowest point between the two peaks, as confirmation of this pattern. A break below the neckline could invite additional selling pressure and potentially a larger correction. However, technical analysis is just one part of the picture, so it's essential to consider other indicators and broader market conditions before making any trading decisions based on this pattern alone. Zooming out, let's talk about the recent broader market trends we've been seeing. Over the past couple of weeks, the U.S. stock market has displayed a mixture of volatility and resilience. Despite some fluctuations, overall market sentiment has been cautiously optimistic, largely driven by recent corporate earnings reports and the anticipation of potential adjustments to interest rates. For example, recent earnings from big players like Amazon and Google provided a boost, with Amazon reporting particularly strong results in its cloud and advertising units. This helped lift the Nasdaq and the S&P 500, which has been helpful in countering some of the losses tied to concerns over big tech's AI spending. Another factor impacting market sentiment is the October jobs report, which showed that the U.S. economy added only 12,000 jobs, significantly below expectations. This low number has led to increased speculation that the Federal Reserve may lean toward a rate cut in its next policy meeting. If the Fed signals or executes a rate cut, it could provide further upside for stocks in the coming months. Moving on to our stock comparison within our QQQ versus QLD challenge. QQQ is currently trading around $487, which is about 19% higher than its peak of $408 back in 2021. This reflects a pretty significant gain and a strong show of resilience and upward momentum. QLD, the leveraged version of QQQ that seeks to double QQQ's performance, is priced around $100. This represents a 6% increase from its 2021 peak of $94. TQQQ has also been catching some attention, currently sitting at $71. While it still lags about 22% below its peak of $91 in 2021, TQQQ has shown a gradual recovery as well. Now, let's get into the details of our November investments. In QQQ, we've now invested a total of $3,100, with a total return of around 4%, representing an approximate gain of $130. Our average cost per share sits at about $469. On October 31st, I purchased an additional 0.2 shares of QQQ at $487. For QLD, we've invested an equivalent $3,100 so far, with a higher return rate of about 5%, translating to an approximate gain of $170. Our average cost per share here is $95. Following the same schedule, on October 31st, right after buying QQQ, I added 1.002 shares of QLD at $99.80. Since May 2024, we've stayed consistent with our monthly contributions to each ETF, and our plan is to maintain this strategy for 30+ years, with a strong commitment to our long-term investing principles. A few reminders of our key principles. Consistent monthly investment. We'll continue to invest $100 into each of QQQ and QLD every month, consistently building our portfolio. Dollar cost averaging, DCA, regardless of market conditions, we're committed to sticking to our investment schedule, aiming to benefit from DCA over time. No sales. Our plan is to hold all shares for 30+ years, with a buy and hold approach that avoids any temptation to sell. No margin trading. We're keeping things safe by only investing with our own money, avoiding the risks associated with borrowing to invest. And just a quick reminder, this challenge is for fun and educational purposes. I'm not a financial advisor, so it's essential to develop an investment strategy that aligns with your personal financial goals and risk tolerance. If you enjoyed today's update, please give this video a thumbs up, subscribe to the channel, and hit the notification bell to make sure you don't miss out on any updates. Thanks so much for being part of this adventure with me. Catch you next time, and happy investing!